God damn it, folks, wake the hell up. Here we are at the end of 2025, and central banks around the world are hoovering up gold like it's the last lifeboat on a sinking ship. We're talking over 1,000 tons a year for the past few years, with 2024 clocking in at around 1,086 tons net purchases, and 2025 still piling on hundreds more, even as prices smash records past $4,000 an ounce. Poland leading the pack with dozens of tons, China quietly resuming buys, Turkey, India, Kazakhstan. These bastards are stockpiling the real stuff in their vaults while they keep preaching to you and me that paper money is just fine. Inflation's transitory, and don't worry your pretty little heads about buying gold yourselves. What a load of hypocritical bullshit. They're preparing for the fiat currency apocalypse, de-dollarizing their asses off, hedging against the endless money-printing circus they've been running since '08, and leaving us little guys holding the bag of devaluing dollars. If that doesn't piss you off, nothing will. Listen up, because I've been ranting about this scam for decades, and it's only getting worse. All right, let's spill the beans on what's really going down here. These central bankers, the same pricks who flooded the system with quantitative easing after the 2008 crash, printing trillions like it's monopoly money, are now quietly, stealthily, loading up on physical gold. We're not talking small change. From 2022 to 2024, they snatched over 3,000 tons combined, doubling what they bought in the mid-2010s. And 2025? Even with prices skyrocketing, they're still at it. First half alone saw over 400 tons, Poland grabbing 67 tons, Azerbaijan 34, Kazakhstan 22, and China sneaking back in with resumes after a pause. The World Gold Council, yeah, those guys tracking this madness, say global official reserves hit around 36,000 tons by late 2025. That's the elites quietly building fortresses of real money, while telling retail investors like you that gold's volatile, overpriced, or some relic from the past. Why now? Simple. The fiat system's cracking at the seams. Back in 1971, Nixon slammed the gold window shut, ending Bretton Woods, turning the US dollar into pure fiat, backed by nothing but government promises and military might. Since then, they've been able to print endlessly. Bailouts, stimulus, wars, you name it, devaluing your savings bit by bit. Inflation? That's not some accident. It's the hidden tax on your paycheck. Remember the 70s, when oil shocks and loose money sent gold soaring to $850 an ounce. That was the last time we saw this kind of frenzy, and here we are again, with geopolitical hell breaking loose. Russia-Ukraine freezing assets, sanctions weaponizing the dollar, trade wars heating up. Emerging markets like China, India, Turkey, they're done being hostages to the dollar system. China's been buying steadily, reserves over 2,200 tons now, but everyone knows they underreport. Turkey's piled on hundreds in recent years, India too. They're diversifying because they see the writing on the wall. US debt exploding, deficits endless, and one day that dollar dominance could snap. Think about it. These central banks hold mostly US treasuries and dollars as reserves, but with debt to GDP ratios skyrocketing, real yields negative half the time, and sanctions showing how fast assets can be seized, why trust paper promises? Gold can't be printed, can't be sanctioned, can't be inflated away. It's the ultimate neutral asset, performed like a champ in crises from 1929 crash to '08 meltdown to the COVID panic. Surveys from the World Gold Council show 95% of central bankers expect more gold buying ahead. They cite it as a long-term store of value, inflation hedge, crisis performer. Hell, gold's share of reserves climbed to nearly 20% by late 2024. But do they tell you this? Nah. The Fed and ECB drones on TV say everything's fine. Rates will normalize. Buy stocks. Trust the system. Meanwhile, they're quietly repatriating gold. Germany brought theirs home years ago. Poland's doing the same. It's like your financial advisor telling you not to buy life insurance while he maxes out his own policy. I've seen this movie before, folks. Back in the 90s and early 2000s, central banks were net sellers, dumping gold as the dot-com bubble inflated and fiat looked invincible. Europe offloaded hundreds of tons under those stupid central bank gold agreements, thinking paper assets were the future. Gold bottomed around $250 an ounce in 2001. Perfect timing for the suckers to sell low. Then came the reversals. Russia, China started buying big post-08, realizing fiat's Achilles heel. By 2010, the shift was on. Net buyers every year since. Fast forward to 2022, Russia invasion. Boom. Buying explodes to record 1,000 plus tons annually. Coincidence? Hell no. When Uncle Sam freezes $300 billion in Russian reserves overnight, every non-Western bank thinks, shit, that could be us next. De-dollarization accelerates. BRICS talking alternative systems, some gold-backed ideas floating. Even Western allies like Poland are loading up, scared of the neighborhood bully. Let me break this down barroom simple, like I'm explaining to my dumbass brother-in-law who still thinks 401ks are safe. Fiat money, that's your dollars, euros, yen. It's just faith-based crap. Governments and central banks control the supply, and boy do they abuse it. Quantitative easing? That's fancy talk for cranking the printing press, buying bonds with fresh digits, flooding the system. Result? Asset bubbles. Stocks, real estate skyrocket for the rich, while your groceries and gas double. Inflation hits 10% plus in 2022, erodes your savings. But gold? Up over 100% in 5 years, smashing records in 2025. Why? Because it's scarce. Only about 3,500 tons mined yearly, and central banks gobbling a third of that now. Compare to history. Under the real gold standard, pre-1914, prices stable for centuries. A suit cost the same in gold terms from Roman times to 1900. Post-1971 fiat? Dollar lost 99% purchasing power against gold. We've had booms and busts worse than ever. Great Depression. Partial gold ties limited printing, but full fiat? Endless cycles. 1980s, Volcker cranked rates to 20% to slay inflation. Painful as hell. Now, they can't. Debt too high. Negative real rates coming, meaning your bonds lose money after inflation. Central banks know this. That's why they're buying gold hand over fist, preparing for the day fiat confidence cracks. What-if scenarios. Buckle up. Suppose U.S. debt hits $35 trillion plus. Interest payments eat the budget. They monetize more. Inflation roars back. Gold to $10,000? Easy. Or geopolitical escalation. Taiwan, Middle East blows up, sanctions fly, dollar weaponized more. Everyone dumps treasuries for gold. Prices explode. Or the big one. Systemic collapse like '08 but worse. Banks fail, bailouts infinite, hyperinflation risk. We've seen it in Weimar, Zimbabwe, Venezuela, fiat to toilet paper overnight. Central banks with gold vaults laugh, the rest beg for resets. Remember Cyprus 2013? They confiscated deposits. Argentina, Greece, capital controls. Your bank's safe dollars? Not if shit hits the fan. And the hypocrisy burns me up. These same institutions discourage retail gold buying. It's not productive, they say. No yield. Yeah, because they want you in stocks pushing the bubble higher or bonds funding their deficits. But when push comes to shove, they hoard the yellow metal. China tells citizens to buy gold jewelry while the People's Bank stacks bars. Poland's president brags about reserves, yet your broker pushes ETFs and index funds. Wake up. If gold's good enough for nations hedging Armageddon, it's damn sure good for your portfolio. Look at the numbers deeper. Top buyers 2024 into 2025. Poland over 80 tons year-to-date at points. Kazakhstan flipping net positive. India steady. Turkey persistent despite their lira mess. Even Singapore, Czech Republic dipping in. Broadening demand, not just BRICS, Europe too. And underreporting? Everyone suspects China, Russia hold more off books. Total mined gold ever? Around 200,000 tons, half above ground in jewelry, but official sector owns 20% now. They're cornering the market slowly. Sarcastic take. Oh, sure, trust the experts who said subprime was contained in '07 or inflation transitory in 2021. The same geniuses now buying gold quietly while advising you against it. I've lost shirts on bad trades listening to that crap. Don't repeat my mistakes. 1933. Roosevelt confiscates private gold, revalues it higher to devalue dollar, steals from savers to bail out banks. Could it happen again? In crisis, sure. Capital controls, windfall taxes on gold gains. But physical in your hands? Harder to seize than digital accounts. That's why they prefer you in paper gold ETFs. Trackable, controllable. Another anecdote. My old trading buddy in the 80s swore by fiat, mocked gold bugs. Retired, broke after .com and '08 wiped him. Me? Kept 20% in gold, slept like a baby through crashes. Lesson. When central banks act opposite their words, follow the money. Literally. What ifs keep me up. If Fed can't cut rates without inflating, or hikes and crashes stocks, gold shines either way. Stagflation like '70s? Gold's best friend. De-dollarization full steam. New reserve currency? Gold backs it partially. Prices moon. Or black swan. Cyber attack freezes banks. Cashless panic. Physical gold king again. Folks, this central bank gold grab exposes the fiat lie raw. They're admitting, actions louder than words, paper money's doomed long term. Endless printing, debt spirals, geopolitical fractures, recipe for devaluation disaster. They've got vaults full for when it hits. You? Scraping by on depreciating wages. So what the hell do you do? Don't wait for the crash. Buy physical gold now. Coins, bars, from reputable dealers. 10 to 20% portfolio minimum. More if you're pissed like me. Silver, too, for the little guy play. Avoid paper promises. ETFs fine for trading, but real metal for holding. Store safe, diversified, not all in one spot. This dip, if it comes? Buying opportunity before they jack prices higher with more printing. Gold's not bubble. Fiat is, inflated beyond reason. Challenge. What are you waiting for? These bankers ain't sharing their vaults. Stack your own before supply tightens more. Hit comments. You buying gold or still trusting the system? Tell me your take, folks. Let's rant together.